Hello, trading is closed on October 7th, 2021. Let's begin things with our disclaimer as we always do. It's my trading plan for tomorrow, Friday, October 8th, 2021, 150th anniversary of the Chicago fire. I can be completely wrong, and anyone who acts on the advice should realize that. Trade at your own risk. Today's pattern we called for was the one with the early low. Typically there's a high in the last hour, and that's what we got. Usually it's a bullish day. Well, we did close up, but when this high isn't the new high of day, it has negative implications for the next day. Now, of course, time doesn't run out until tomorrow's open. If we gap and overtake these highs promptly, that's the normal pattern. Tomorrow's open can substitute for today's close, and if the open or close is up here, that's what you normally see. But otherwise, when the day gaps up, hits all these new highs, closes under all those highs, even under the lows, if we can't reverse it at the open tomorrow, it should lead to lower prices, and of course that conflicts with the fact that we have a higher MEJT target, 4422.44. Usually when you get conflicting signals like this, most often is you gap and promptly trade outside today's range. We have the employment report coming out tomorrow, so it wouldn't surprise me if we gapped and traded outside the range. The direction should be obvious before the open, one would think. During the day, we got an ultimate buy signal from MEJT. We don't have to get more than this. Usually you do, but you don't have to. And this drop is called false, calls for a retracement. Don't forget, though, when you have a major change in trend, typically you'll leave a failed target behind. There are any number of ways to count this. We had a valid count yesterday with A, B, and C equal to A, but just because that count works, it doesn't mean other counts won't. We now have another valid count. These levels are the same, A, B, C, and C is 1.618 times A, so it's another logical place for this wave red B, if that's what it is, to end. Now, of course, just because this count works doesn't mean other counts don't. That doesn't even make it the right count. But the fibs all work. Relationships are pretty clear. And if we do start a big wave red C down, I wouldn't count on today's MEJT target printing, because when you get a big move down, and if we had a wave red C comparable to wave red A, it would be a pretty big move. Typically, you'll leave a failed target behind, so you can't really count on that. Tomorrow's pattern has the early low. We could still gap up. We have mixed signals. We'll use our standard rules. It's a higher MEJT target. Unless we gap down sharply, it should print. That's a bullish sign. What's not bullish is today's normally bullish pattern didn't close near its high. We gapped up, hit a higher high, closed under all the intraday highs, and that's bearish. The employment report tomorrow can move the market in a large way. Lacks the level of predictability I look for when I trade. I don't try to predict how we'll go in reaction to it. I wait to see what happens, and then I decide. But the most likely thing is a significant gap at the open. These are the other options. If we gap down, we'll be under support provided by the FOMC announcement price, which is right here, right where we stopped in the afternoon. That's support. If you're under it, it becomes resistance. So if we gap under it, we're under support, and the wave count we just showed is compatible with a significant down move, wave red C, likely to last weeks, so long as today's high held, and of course that would be a stop. If the gap's higher, we're still going to have resistance at and just over the MEJT target price. Bulls need to overtake today's high promptly, or I would expect to see lower prices tomorrow. As we showed in the count, this is a very logical place for this rally to end. Doesn't mean it's the only place, but if we can't take this out, I think the count should be respected, because I'm still looking for us to hit somewhere around 4,200, which I think will probably be about as far down as we're going to go unless things change, and they certainly could change. So tomorrow has the early low, looking for a significant move in response to the FOMC announcement, which is what we usually get. It's a negative pattern. If we take this out early, I wouldn't count on this printing if we gap down. And the burden of proof, as it were, is on the bulls, because I think this is negative action unless we invalidate it early tomorrow. And that's today's call.